Hello, this is Srijal. I'm the CEO of PC Financial. Today, I'll be going through how the markets have been since year to date. We are into November now already, coming to the end of the year. So it will be a good time to actually recap and go through how markets have been since the start of the year. And also then I'll go through what we can expect going forward in the next 6 to 12 months for where markets are concerned. It's been a very volatile time for markets. Alright, initially markets started the year well enough, but however, then they were hit by the US-China trade war, trade winds, and then subsequently more volatility as well. So overall, if we look at, for example, the Asia markets and the China markets, Asia markets as represented by MSCI Asia ex-Japan index is down 16% or so year to date. The China market as represented by Shanghai index is down about 20%. At one stage, from the high, the China market was down 30% more, and the main contributor was mainly because of the US-China trade war, alright, that erupted this year, the earlier part of this year, and even up to now, it has yet to resolve. But having said that, Asia, because it also has other emerging markets, has also been hit because selected emerging markets actually had their currencies hammered as well. So Indonesia, for example, the Indonesian market is only down about 8 to 9% year to date so far. However, if you factor in that the Indonesian rupiah is also down another 9 to 10% versus the US dollar, then Indonesian investors have been hit quite badly also. So selected emerging markets like these have also contributed to the volatility in Asian markets here. Now, having said that, US has actually come out relatively alright in the US trade war relative to the Asian markets and China markets so far. If you look at the US S&P 500 index, the US market is actually up about 2% year to date. Now, having said that, the US actually had a really bad month of October, whereby it was down 10% or so in the month of October, which effectively more or less wiped out the year's gains for the US market. So generally, it has been a volatile time for most markets, notwithstanding, alright, that selected markets like US are actually at least holding up a lot better compared to other markets like China and Asia. Another added thing to the volatility recently is that the oil price recently in the last 1 to 2 weeks have actually plunged, alright, from $70 over per barrel to now at $50 over per barrel. That has also contributed to another point in the volatility. Now, a low oil price is actually a relatively good thing for trade and for the global economy. However, the concern for investors is that this plunging oil price reflects that actually the global growth, economic growth is likely to slow going forward. So it's another point of concern for investors, right? This rapid rate of plunging of the oil price. So that has been another worry for investors. Hence, going forward over the next 6 to 12 months, we can continue to expect a lot of volatility. There's no end in sight to the trade wars resolution between China and US. So my advice to investors would be to stay in a diversified portfolio, especially with a certain amount of US assets, because so far first, US dollar as well as the US stock market has actually been holding up better compared to the rest of the Asia and the rest of the world. Thanks.